Snapper Limited is an Australian corporate tax entity that operates a fishing business. It derives Australian income, foreign income through an overseas branch, foreign income from an overseas source, and a dividend from a wholly owned overseas subsidiary. Snapper had non-deductible expenses relating to the foreign income, and it also received a foreign income tax offset in the immediately prior year. Snapper's Conduit foreign income is its overseas branch income from a permanent establishment, plus the dividend from the subsidiary, less the non-deductible expenses, and plus the grossed up value of the foreign income tax offset from the prior year. Snapper subsequently declares an unfranked dividend payable to its foreign shareholders to be Conduit foreign income. Its foreign shareholders can treat the amount of the Conduit foreign income as non-assessable, non-exempt income and not subject to withholding tax. Conduit foreign income is foreign income received by a foreign resident via an Australian corporate tax entity. That is, the Australian tax entity is effectively acting as a conduit for the foreign income. Unfranked distributions to non-residents generally trigger a withholding tax liability. However, conduit foreign income amounts do not trigger any Australian income tax or withholding tax liability when distributed by the Australian corporate tax entity to its foreign owners. This effectively aligns the tax treatment of CFI with foreign residents only being taxed on Australian-sourced income. Common types of foreign income that are not taxed in Australia include foreign equity distributions received by an Australian company, foreign income derived from an Australian company through an overseas branch, capital gains on disposal of shares in an active foreign company, and foreign income to which foreign income tax offsets are available. The amount of CFI is calculated in accordance with a method statement. Step 1 determines the amount of income that would not be included in assessable income, assuming the company was a foreign resident. Step 2 deducts any otherwise assessable income, such as foreign income that does not meet the CFI criteria. Step 3 adds any additional CFI received from another Australian corporate tax entity and certain foreign NANE equity distributions, such as foreign dividends that were not included in Step 1. Step 4 subtracts certain non-assessable amounts and non-assessable income with franking credits attached. Step 5 subtracts certain non-deductible expenses that are reasonably related to the foreign income. The result is the entity's Conduit foreign income. However, if the entity has received a foreign income tax offset in the immediately prior year, the grossed up amount of the offset is added to the entity's Conduit foreign income for the current year. The amount of CFI in a distribution must be declared on or before the distribution date and must be accompanied by a supporting distribution statement. Distributions of CFI have different tax consequences depending on the residency and type of recipient. Distributions to foreign residents are non-assessable, non-exempt income of the foreign resident and are not subject to withholding tax. Distributions to Australian corporate tax entities are typically assessable income as per normal unfranked distributions. However, if the recipient company subsequently makes an unfranked CFI distribution before its income tax return lodgement date, the original distribution received may be treated as non-assessable, non-exempt income. Distributions to Australian resident individuals are assessable income as per normal unfranked distributions. To recap, Conduit foreign income is foreign income received by a foreign resident via an Australian corporate tax entity. There are a range of rules and thresholds that specify the type of foreign income that can be considered Conduit foreign income. When Conduit foreign income is distributed to a foreign resident, the proceeds are non-assessable, non-exempt income to the recipient, and they are not subject to withholding tax.